Let's get on board Madan Sabnavis, Chief Economist at Care Ratings, who now joins in on the show. Madan, to start off with, what's the expectation for the bond yields? Because what is also going to underpin the sentiment largely will be the OMO tomorrow.
I think the range of the 10-year yields will probably remain in the current range, because I think what we are seeing today is more of a year-end phenomenon where liquidity tends to tighten. And we also have this case of redemption of CDs, which is putting certain kind of pressure on banks. We also see that deposits are not growing. I think this has been one of the major concerns of the Reserve Bank of India too. So with liquidity conditions being tight, I would tend to think at least till the end of March, until such time that the government comes back into the spending spree, the 10-year yield would remain in this particular range.
How do you see us ending in terms of a GDP growth, given all of the concerns that we're battling with?
I think there's very little which is really happening at the ground level to warrant a very optimistic forecast for the next year. So I should tend to think that a growth rate of something like 6% would be something which we should be aiming at. And this also would be more on account of a low statistical base here, which would be providing this kind of a boost from 5% to 6%. And we're again going to assume that the monsoon is normal, so we get a fairly decent agricultural harvest. But I think the major concern remains on the industrial sector, the fact that consumption is not taking off, nor is investment, nor is the government spending. Now there is some hope that the government is trying its best to try and expedite certain projects which have been held up, and there have been certain announcements made in the recent past. And I think that would probably help to sort of kickstart this growth process. But whatever happens, to my mind, it's going to be more of a very gradualist in nature. So nothing really great is really coming off, and I think the kind of political uncertainty which has cropped up in the last couple of days, I think that would also probably come in the way of not just sentiment, but also in terms of reforms or any kind of thing which has to go through the parliament.
The other bit that I heard a couple of voices on, Madan, were that we started off with an optimistic, or rather maybe a realistic target of 4.8% of the deficit for the next year. But with food security bill coming in, maybe 6 months down the line, 1 month down the line, people might just wake up and say that, hey, it sounded realistic at the start of the year, but with all the things that are being done in the election year, we may not end up with that figure. Is that something that scares or worries you as well?
No, not so much the food security bill, but the assumptions which were made during the budget. Because I think there were three very bold assumptions made. One is that GDP growth will be somewhere in the region between 6.5% to 7%. I think even the economic survey played of something like 6.1 to 6.7%. Because I think this is a kind of optimism which sort of justifies the kind of revenue or tax revenue which the budget has taken into account. The second has been on the disinvestment front, looking at something like 55,000 crores. And somewhere in between, it also thrown in the spectrum sale. So we are talking of a lot of good things which have to happen on the revenue side for the targets to be met. But my sense is that in terms of the food security bill, there would definitely be an additional burden which would come in terms of the pricing. Because right now the only problem I see is not more on the quantitative side, but it's more on the pricing front. Like earlier, if you look at the issue price was somewhere in the region of 5 to 7 rupees, and now we're talking of something like 1, 2, and 3 rupees. So I think that's where the food subsidy bill would tend to increase. But I should think that the finance minister has already buffered in this particular fact when he spoke of the kind of target which you have kept for subsidies, especially on the food side for fiscal 14.
Everyone, Madan, seems to be taking heart from the fact that the core inflation is below 4%. How do you see that playing out? And do you see that widening wedge between CPI and WPI inflation continuing?
Now, I think the difference is definitely going to continue, and core inflation is only one part of inflation. And while theoretically one could say that this is where the Reserve Bank of India policy would matter, but the RBI has been looking more at generalized inflation, or what they're calling headline inflation, so the overall inflation number. And also at certain times it's spoken of CPI inflation. And I think the concern of the RBI is more palpable on the fact of the CPI inflation, because the major problem which we have today is that consumption is not picking up, and the consumption is not picking up because primarily households are spending more on food items, having less money for consumer goods and for savings. So these are the twin kind of concerns, and I think until this particular issue is addressed, I really don't think that the RBI would be in a position to take further action on interest rates, even though core inflation would tend to be subdued, primarily because of the global economic slowdown and the fact that commodity prices are slowing down, especially of metals as well as crude oil.
Madan, appreciate you taking the time out and joining in with your perspectives.